Hello everybody. In this video, I'm going to be taking a brief look at Best Buy, and before I get into it, I just want to let you know this is not going to be a deep dive into their financials by any means, but more so me giving my opinion on the company as well as my general outlook for the overall industry. So without further ado, let's get started. This is Best Buy, ticker symbol BBY. And their year-to-date chart on Yahoo Finance, and we can see that they were about $88 toward the beginning of the year, and about $92 near their high, and they went all the way down to $48. So seeing the stock price get about halved, or halved, not really sure how you say that, but this is actually not nearly as hard hit as a lot of the other big similar department type tech stores. There's not really a direct competitor to compare it to, but not getting hit nearly as hard as a lot of the other competitors out there. But here's actually what's really surprising to me. I focus a lot more on the bigger charts. Here's the 5-year chart because I'm more of a long-term investor, more so than just a swing trader looking to make money on a stock in a couple of weeks. But what's really surprising to me here is that 5 years ago, the stock was at $34, and it's seen a really steady increase with a lot of volatility in the last couple of years, but they're at their recent high, they were at $92. So really surprised that the stock has really almost tripled within the last 5 years. And another surprising thing is that revenue and earnings are really steady year over year for the last 4 years. We're seeing a slight increase in revenues and then really steady earnings at just about $1 billion per year for the last 4 years. And I want to talk about some points by analysts at Morningstar on Robinhood, but before I do that, I just wanted to mention what I consider their biggest competitor, and a lot of you are going to disagree with me, but Best Buy requires a ton of space. It's usually a massive store unless they have a smaller space in a mall or something like that. But Walmart, I think, is actually their biggest competitor because they have a huge media space in the back of the store that can be very similar to Best Buy. And you could argue that Best Buy has much better customer service and a much bigger variety of products, which I would completely agree with. But is that necessarily enough to keep them alive long term? And I guess that kind of remains to be seen, but I don't really know if it does. In the age of the internet, I don't know if you really need somebody there to tell you about all of the different products. You can just look at reviews online. And if you do need to be at the store for a physical location, Walmart is most likely going to have your product. But now I'm going to get into some points by analysts from Morningstar, and here we're taking a look at their overview of the research report. They were given 2 stars for a Morningstar rating, which I would agree with. I'm actually really surprised how well their stock is doing right now and how well it's been doing in the last few years. And I would actually love to hear your opinion on why you think Best Buy is doing so well. They have a pretty average balance sheet, which is fine, but I just really don't see them being okay for long-term growth. And they have their fair value at about $64, and as we just saw a second ago, they're at $80-something currently, so they're already well above what Morningstar considered their fair value. And Morningstar said their uncertainty was high, but to be honest, they're saying most uncertainty is high if the stock was even somewhat affected by the recent events in the last few months, and big retail stores, of course, are. And then stewardship standards. So to be honest, I really don't know about their top management or governance. So sure, I guess I agree with that. Now I'm going to take a look at a few points by an analyst at Morningstar, and I'm going to take a look at a few negative points as well as a few positive points. And although I've been kind of looking at Best Buy from a negative perspective so far, I would say these bullish points are really strong points for why Best Buy is doing so well right now. And I think this first point here is really why Best Buy has been able to do so well recently, and it's because they've re-engineered their online sales platform, and if they're not able to do that, they're not going to be able to outcompete their competitors right now, and the company's going to die. So it's really great that they've been able to really do so well with their online sales, basically out of need. And then the next point is that smart television, smartphone, gaming, health and wellness, and connected home technologies offer product cycles. So they're coming out, 4, 5, 6, 7, 8 times a year. And these cycles really help them to be able to sustain sales throughout the year. And this last point is also a good one. It's that Best Buy has eliminated more than $2 billion from its annual cost structure, and that they're going to seek another $1 billion in improved efficiency in the next 5 years. And I think for Best Buy to really sustain their sales, they're going to have to be near perfect for their supply chain efficiencies. So it's really great that they're able to cut those year over year. Now I'm going to be taking a look at a few negative points by an analyst at Morningstar, and really all 3 points are going to be talking about hurting profitability at Best Buy in the coming years. And the first one is talking about how online retailers, mass merchants, and warehouse clubs are all fighting for market share. And of course, that's going to hurt their profitability if they're having to decrease their margins. And it's saying that that could potentially restrict Best Buy's future margin expansion. And there's really no chance, in my opinion, that they're going to be able to increase their margin. At best, they could really just maintain the margin they have on their products right now. And then the second and third point here is actually something I really haven't thought about, but it's on in-store sales. They're making a ton of money and have a really great margin on their warranties, which is the second point. And then the in-home service advisors and technical support subscriptions, which is that third point, have really high margins, and Best Buy or in-store sales are going to be able to do that much, much better than any kind of online sales. And I really don't have any data to back this up, but I think warranties and these technical support subscriptions have got to be decreasing over the last several years. I really don't think people are getting them like they used to, which is really, really hurting or going to be hurting Best Buy's margin in the future. Let me know down in the comments why you think Best Buy has been able to do so well as many of the other really large retailers and similar businesses have been doing so poorly. Come check out my channel, as I've done a ton of other brief stock analysis videos very similar to this one. Subscribe for more content, and thank you so much for watching.